As someone who's been involved in these talks in the past, do you think it jives with the conversations that are happening behind closed doors and the sentiment behind closed doors right now?
I do, and I think that a lot of the optimism you're seeing this morning is justified. It sounds like there is real progress. I heard that the talks yesterday actually went better than expected. And so I think that we are headed in a positive direction here. And of the things that Kayla was just talking about, one thing I want to highlight that's already happening is that China is increasing agricultural purchases. And they actually set a record last week with the amount of U.S. pork that they imported. And then the Huawei issue, I actually want to point out, that's good for the U.S. This isn't just some sort of concession to China. It makes sense for us to continue to do business with Huawei on non-national security sensitive stuff where other countries would otherwise get that business. And so I think the optimism is justified, and what's happening behind closed doors, I think, is likely consistent with the tweets.
So, JJ, what does happen with all of these tariffs, and what do you think at the Dow being up 376 points right now, the S&P up almost 1.5%. What do you think's baked into the market here?
Well, I think it's great. And as we head into earnings, particularly, it's nice because we're starting to see the financials who we haven't seen perform in a while. You see most of them up at least 2%. Most of them there 3% on the day. I agree with Clete. It's great news out of there. However, what's it going to take for the market to get over 3,000 on the S&Ps? We've been stuck between 2,800 and 3,000. I don't see anything without an actual pen to paper, so to speak, that's going to drive us above 3,000 in the short term, Morgan. It just seems hard to see that there's an impetus there without them coming out with an announcement today and saying we have a deal, and then we'll turn to earnings next week. Again, no, the sort of innuendo and this may happen, this may not happen. It's almost like the market's tired of it. It's great that let's face it, we're just back to October 1st levels on both the S&P and bond yields at the moment.
If we get some sort of, I guess, quote unquote, skinny deal, or at least like a halt in the increase in rates on tariffs next week, possibly into December on another tranche of imports as well, does the Fed have a reason to cut at the end of this month?
Well, you know, as Steve just talked about, we see the probabilities coming down a little bit. I would think they probably don't, actually, and you'll see that change pretty quickly. That being said, I want to qualify it with depends what the skinny deal is. If the deal is just we're going to kick the can again on the December 15th tariffs, then I still think the pressure remains on the Fed to cut.
Hey, Clete, I just want to follow up on something you said. You said, you know, you've been hearing from people things went better than expected. Is that beyond just press reports? Do you have anything to share with us in terms of what went better than expected from the people you're hearing that from?
I just want to say that I think that the mood coming out of there was positive, and you're already seeing some of that effectuated in some of these announcements out of China, not only the ag sales, but the foreign ownership caps. And so I do think that you're getting positive signals from the inside. I don't want to go into any more detail than that. One other point I do want to make, though, and I think this is something you guys have been alluding to, is what happens with the tariffs. And I do think I would agree with what Myron Brilliant said, that you're going to see an October 15th delay. I do think from the U.S. perspective, though, there's a history here where we want to make sure that China actually implements this stuff in a meaningful way. And so I think before you get to the point where the other tariffs are totally taken off the table, or you see rollbacks of existing tariffs, there's going to be need to be some sort of period of implementation. I also think this is going to be an ongoing issue. The U.S. shouldn't just stop here. It's good to bank progress. It's good to dial down the temperature, but they need to keep pushing China on all these other structural issues that affect our economy.
Hey, Clete, really quick, how much then is riding on this potential meeting with Xi in November at APEC, and do we believe that meeting will happen?
I hope that it does. I mean, we don't know yet, but these in-person meetings at the leader level are absolutely critical, and that includes the meeting today with Liu He. And that's because I think China wants to hear directly from the president what his objectives are and what his intentions are for the future. And the same thing for us is we want to hear from President Xi that he is sincere and is really going to implement this stuff. And that's why those leader-to-leader engagements are just, they're just irreplaceable.
JJ, I want to shift gears a little bit. What's leading the S&P higher today is actually Fastenal, which is an industrial distributor. It's sort of seen as an early read on the broader health of the industrial economy right now. We've seen these weak manufacturing numbers, but then when you see a strong earnings report like this, as we do get into earnings season, is there a chance here that some of the industrial and manufacturing sides of the economy could be holding up better, at least through the companies, than has been expected?
Well, I think they have been holding up a little bit better than many of us expected. However, we'll see what they say going forward. The thing that concerns me, Morgan, is they continue to put off building infrastructure. So what I really want to hear is a lot of these industrial companies coming out and saying, we're investing money. And I don't know that they necessarily will, because how can you invest when you don't know the rules of the game? The toughest thing about being a CEO in that space right now, in my opinion, is we don't know the rules. When companies know the rules, whether they like them or they don't like them, they find a way to make money to play within those rules. When the rules could change at any moment, it's very, very difficult. And what really burns you is if you don't spend money now on infrastructure, this is the type of thing that comes back to haunt you in 2 or 3 years. We haven't seen anybody really talking about it in the last few quarters. And if we continue with 2 or 3 more quarters of it, it actually makes me a little bit nervous for what happens after tariff news actually does come out.